An effective internal control system is a cornerstone of corporate governance and enterprise risk management, providing reasonable assurance that an organization will achieve its strategic, operational, reporting, and compliance objectives while safeguarding assets and managing risk appropriately. As organizations operate in increasingly dynamic environments characterized by digital transformation, cybersecurity threats, regulatory complexity, and global competition, internal control systems must evolve beyond traditional financial controls to become integrated management frameworks supporting organizational resilience and strategic execution. Within the program, effective internal control is regarded as a continuous organizational process that combines governance, risk management, operational control, communication, and monitoring into a coordinated system capable of supporting sustainable value creation and stakeholder confidence. The effectiveness of internal controls depends not only upon appropriate policies and procedures but also upon organizational culture, information quality, and management commitment to ethical governance. The framework identifies 5 fundamental elements of an effective internal control system, closely reflecting internationally recognized control frameworks. The first element is the control environment, often described as the tone at the top. The control environment reflects the ethical values, management philosophy, governance culture, and leadership behavior established by senior management and the board of directors. A strong control environment promotes integrity, accountability, transparency, and ethical conduct throughout the organization, encouraging employees to comply with internal policies and governance expectations. Effective internal controls therefore begin with leadership commitment rather than procedural documentation alone, as organizational culture significantly influences individual behavior and control effectiveness. The second element is risk assessment, which requires management to establish organizational objectives and systematically identify and evaluate the risks that may prevent their achievement. According to the framework, organizations should set objectives, identify and assess the risks affecting those objectives, consider both internal and external risks, and distinguish between controllable and uncontrollable risks. Risk assessment provides the foundation upon which appropriate control activities can be designed, ensuring that organizational resources are directed toward managing the most significant strategic and operational uncertainties while maintaining acceptable risk exposure. The third component comprises control activities, representing the policies and procedures that ensure management decisions and instructions are implemented effectively throughout the organization. Control activities include authorization procedures, segregation of duties, reconciliations, physical safeguards, budgetary controls, supervisory reviews, and information technology controls operating at every organizational level. These activities reduce the likelihood of fraud, error, operational inefficiency, and regulatory non-compliance by embedding preventive and detective controls within routine business processes. Effective control activities therefore translate governance principles into practical operational procedures that support organizational objectives. The fourth and fifth elements are monitoring and information and communication. Monitoring requires continuous evaluation of internal control effectiveness, typically through management review processes and internal audit activities that identify weaknesses and recommend improvements. Information and communication ensure that the correct information reaches the correct people so they can carry out their responsibilities, requiring robust information systems capable of generating reliable internal and external information. Effective communication enables timely decision-making, supports accountability, facilitates risk management, and ensures that emerging issues are escalated appropriately throughout the organization. Together, these 5 elements create an integrated control framework capable of supporting strategic governance and operational effectiveness. An equally important aspect of internal control concerns information flows for management. Recognizing that different management levels require different types of information to discharge their responsibilities effectively. The program identifies 3 management levels: strategic, tactical, and operational, each possessing distinct responsibilities for internal control and risk management. Effective organizational governance, therefore, depends upon designing information systems that provide appropriate information to each management level while facilitating communication between organizational layers. At the strategic management level, senior executives and the board are responsible for monitoring and controlling the organization as a whole while reviewing internal control systems to ensure their effectiveness. Their risk management responsibility involves assessing the risk outcomes of strategic decisions, supported by advice from the risk committee where appropriate. Consequently, strategic managers require broad, forward-looking information concerning organizational performance, external risks, governance effectiveness, and long-term strategic opportunities. Such information supports strategic planning, enterprise risk management, and governance oversight rather than detailed operational control. At the tactical management level, Managers implement strategic decisions and ensure that departments operate effectively through the establishment and maintenance of internal control systems. Tactical managers remedy identified control weaknesses, advise strategic management regarding emerging risks, receive operational risk reports, and recommend appropriate risk mitigation procedures. Information flows at this level therefore connects strategic objectives with operational execution, translating governance policy into departmental management while ensuring that significant operational issues are communicated upward for executive consideration. At the operational management level, supervisors and frontline managers control day-to-day organizational activities through detailed internal controls while identifying operational risks and reporting weaknesses to tactical management.